Guys, how's it going? So we want to introduce. Obviously, we've got a short. We don't have a large audience today because the storm, different things. We didn't really promote this that hard, but we do have some solid people on here, and we have some great guest speakers that I want to introduce. Micheal and Bernardo. Our last Zoom, I think, was really informative, guys. I really do. There's some gold in that stuff. We're trying to figure out these new ways around, but. Today, the first 10 minutes, I want to introduce you guys to Andrew Hicks from Seller Shield. This is a new product that I believe you're going to see as a member benefit coming through the boards, is my understanding. In this litigious world we live in, and with the storms,
litigious.
That's a big word.
Big word today.
It's a big word, y'all. I pronounced it 14 times last night, so I can say it. And I get litigized all the time around here. So what we want to do is and it was actually Amir that said to me over the weekend or last Friday or something, is, hey, this might be a good time to have Seller Shield on to talk about it. It's going to be coming soon, but being a brokerage that we kind of hear about these things a little sooner than the average agent does on the street. So without any further explanation that I don't really have well orchestrated, I'm going to introduce you to Andrew and let him tell us real quick about this product, guys. Andrew. What's going on?
Thank you so much, Mike. And yeah, the world is very litigious. I'm bad at pronouncing stuff too, so I get it.
Thank you for using the word of the day.
Exactly, litigious. But yeah, so I'm Andrew Hicks. I'm with Seller Shield. I don't know if I know too many of you on here currently, but I know a lot of agents that are with your brokerage. And we met with Mike, told him about our product. We just launched in the state of Florida not too long ago, just a couple of months ago. And it's a very simple, very basic product that's actually free for you to use, and it helps reduce your liability, and it helps protect your clients. So is anybody down for hearing about something like that?
I need to hear about it again.
I think so.
Absolutely. I love the fact. Oh, look at the phone. He's got graphics and stuff. We need help over here.
I actually just learned that yesterday on accident, so I'm obsessed with it. But anyway, I'll go ahead and go into it. Am I able to share my screen?
Yeah. Sheila, do you know how to do that so you can share?
We're down our normal Zoom board operator today. He's in Italy.
Yeah, poor Byron is in Italy.
So y'all bear with Sheila. She's in here stepping up and helping us out. There you go.
Oh, look at that.
Wow. Yeah, that would be. Your tech person gets to go to Italy. That's pretty awesome.
Yeah, there's a whole story behind that. I think he ran out from the storms. No, he had a vacation scheduled at the perfect week.
Yeah.
So he knew it was coming. But anyway, I'll go ahead and get into it. I'm with Seller Shield. We're a company that's been around for about 7 years. We're in about 15 different states. We just launched in the state of Florida a couple of months ago. We are a member benefit of GTAR Pro, that conglomeration now. We're also part of Florida Association of Realtors as well. And we've been around in the state of Texas for a very long time. Right around 60 to 70% of all transactions that happen in that state, they use us, they use our product. I actually live in Tampa, so I'm local to y'all, so I'm happy to sit down and talk with you, help guide you through the process. We also have a team that will help onboard you as well, and you'll all very likely receive an email from us reminding you to sign up or inviting you to set your password up for our service. Again, it is a completely free product, and what we do is we solve two different problems within a transaction, two that previously have not really been solved. First of all, we have our gold standard disclosure process, which it walks your sellers through the seller's property disclosure in a much better format than that long property disclosure with all the little check boxes that yes, no, maybe. What we do is we took that and we made a digital interactive version of it. So if you just think about TurboTax, but for the seller's property disclosure. So we walk them through each and every point. We give them pictures, videos, definitions, examples of everything that it's asking. So if they have no idea what a sump pump is, they can click on it. It'll show them exactly what it is, and they'll be able to tell if they have one. Another important thing is that if it comes to a question where we see a lot of claims, it stops them and says, hey, this is very important. Make sure that you fill this out correctly. And that helps you all out a lot, because if, God forbid, something turns into a lawsuit, you can hand this to the attorney and they can say, hey, it looks like the client stopped right here and read this 5 times. They were here for 5 minutes and they clicked that button. So that shows that they were deliberating on it. That gives your attorney a lot of ammunition to make sure that you're protected. So once they finish going through that process, They sign the form, and it gets sent right back to you in the normal seller's property disclosure looking format. It just has your signature, or has their signature on it, and it comes right back to you. The greatest thing about that is that most E&O companies have recognized us as a really good idea. So if there is a claim for you, they'll typically waive the deductible or waive at least half of it. So that part's completely free.
And that's pretty cool because we have a $5,000 deductible, guys. You have 5,000, and the brokerage has 5,000. So if you can use this product and avoid that cost or half of it, if you have to, it's a good thing and a free product. But go ahead.
Yeah, and you're probably wondering how we make money, because obviously to put me up in this nice hotel where I'm doing another conference probably costs a lot. The way that we make any money is our home sale legal protection, and this is optional, and this is for the seller to choose if they want to use this or not. Whenever they're going through that disclosure process, we ask them 2 times if they would like to purchase additional home sale legal protection, and what that does is that protects them, depending on which tier they choose, for up to 4 years and $75,000 in legal fees post-closing for any dispute. It doesn't have to stem directly from the disclosure. It can be the roof leaked a year and a half later, and I think that y'all knew about it. They can sue for that, and you have to respond. You have to use your E&O. It's no fun. What we do is if there's a verbal claim or a written claim against your sellers for up to 2 to 4 years after closing, we will hire a local real estate attorney within 48 hours to respond to that, and will pay up to $75,000 of their legal fees. That's going to be
That's
the
awesome.
highest.
If you're looking for some response, yeah, that's awesome.
Because don't forget, guys. When it comes to anybody can sue anybody for anything, and it's not whether you're right or wrong. You still have to defend the claim. So that's where this is going to come into. It's still going to cost you. So.
Yeah, and it's guys, it's happening more and more often. I think this is a phenomenal product. I can tell you, I would use it if I'm selling.
Yeah,
absolutely, and I'll purchase the higher tier plan.
Oh yeah, and so these are the 2 of the products. These are some of our most popular ones. Typically, the 2-year, $30,000 protection for up to 2 years post closing is the one that most people choose. We also have one that's 1 year at $20,000 for $199. And what a lot of agents do is they'll purchase that protection plan for their sellers and use it as a closing gift. If the seller wants to extend it to that 2 years, all they have to do is pay the difference on it. So you can offer that to your clients to stand out in a listing appointment saying, hey, if you list with me, you're protected for up to 2 years against any lawsuits that come your way. Because the fastest way to lose a client is to have them get sued, because they're going to blame you because they're going to assume that you were supposed to guide them through that, when in reality, we can't really walk them through the seller's property disclosure. That's why Seller Shield, we can do that, and we take that liability off of you.
Nice.
And that's really it. It's a very basic product, and it fulfills a need that has been around for a while. To get started, it's super, super easy. You just go to sellershield.com, and you can add that /FL in there. What I'm going to do is I'm going to put my contact info into the chat, and someone can paste that in there for everybody. But are there any questions so far on anything that we've gone over?
I'll let the agents reach out to you. We'll make sure they get the contact information. I just see this as really a win-win situation, probably a 3-way win all the way around. I like the fact that you guys or the product is going to coach them on filling out thoroughly the seller's disclosure. That is huge, guys. The number one reason agents and sellers get sued is for disclosure purposes. And sometimes it's not intent that they're actually trying to hide something. They just don't know that they were supposed to do this and didn't think it was a big deal. So I see that as a win. I see the potential for the agent, saving some deductible money and the legal fees. That little insurance policy is a cheap insurance policy for legal fees, I can tell you.
Oh, yeah.
So,
and using our platform, whenever you send an invite out to them, really all you do is you just put in their name, address, email, phone number, and it sends them out an invite via email and an invite via text. So they can fill it out directly on their phone, so they can walk around the home while they're doing it. And like I said, it's a much better experience than those yes, no, maybe boxes. And additionally, have you all ever had an issue with the seller not being able to fit everything they need to in the little boxes that it provides? Yeah. So with our platform, they can put in as much information as they need to. And what it's going to do is it'll automatically create an addendum and put it right there inside of that document. So you don't have to worry about finding an addendum and typing in all that stuff, going back and forth. It's a one and done. Everything's completed. They have to complete every single box that's required. Otherwise, it doesn't finish. And we'll remind them over and over, hey, you have to fill this disclosure out if they haven't completed it. You also have a dashboard that will tell you how far along in the process they are. And if you use a transaction coordinator, if you use that kind of leverage, we have a TC experience now where your transaction coordinator can sign into their own account and send those sellers' property disclosures out on your behalf so that you have a record of it. They're able to see it. It still looks like it's coming from you and you're doing all that work and they don't exist. So you look like you're doing a ton of stuff.
Yeah, that's really cool. So I noticed that you could pay at the time, you're doing the seller disclosure, but you could also pay at closing, right? If they paid at the time they're filling it out, and the property doesn't close, they decide not to sell, are they able to get refunded, or how does that end up working?
Yeah, so that's a really good question. So the way that it works is they can use that online price that you see here up until the date of closing. So if they didn't buy it when they did the disclosure, but they want to go back in and buy it a day before, they can do that and they'll pay that online price. The closing proceeds is a bit more expensive because we have to track somebody down and try to figure out how to get paid from it. But yeah, let's say if you list the home, they purchase the protection, it doesn't close, they decide to take it off the market for a year and wait until their kid goes to school. There's two options that they can do. They can contact us and we'll refund them, or they can just hold on to that coverage until they sell the home. It doesn't start until the home closes. So they can hold on to it for 5 years, 10 years, however long they need to.
Gotcha. Okay. I think it's really important. I mean, especially right now with all the damage to homes that have happened.
Yes.
It's probably a very in-depth deep dive into the seller disclosure, and it's more important now than ever to make sure disclosures are happening.
Yeah, absolutely, guys.
In just the 15 states that we've seen a 30% increase from 2022 to 2023. 2024 is shaping up to be an even higher increase over last year. So protect yourself.
Yeah, exactly. And in the property condition environment that we just weathered the last month, and the legal environment that I see that we're in that's continuing to grow, guys, I just think this is a great opportunity for you. I would incorporate it into my business plan and suggest you do too. Hey, Andrew, thank you so much for coming on today. I really appreciate it. We wanted to kick this off and letting you tell them about this product. And thank you so much for coming on today. Anybody needs to get a hold of him, we've got his contact information up on the board. All right. Take care, man.
Thank you. I'll have an awesome one.
You too, man. All right. So the other thing we want to get into today, guys, I want to introduce our guests that we always have, Micheal and Bernardo. Again, as we started this off, you guys, we really had some good discussions that will be evolving as we move forward. I also want to introduce, and if you can find him, Sheila, I want to introduce you guys to John Barcelo. We recently just did a podcast with John, but John has, I don't know if we can get him on the screen, if we click on him, how we can do it. We're going to defer to you guys in a minute and kind of have an open discussion. There's John. Hey, John, how you doing, man? Thank you for coming on today. Listen, I've gotten to know John from doing some trainings here at Ruttenberg. And I think it was 3 years ago now, I popped back in the room one day and they said, oh, we got an appraiser back there doing something. I popped back in. And I will tell you, I was blown away. John is just a wealth of knowledge. He understands the whole industry and specifically how to apply his arena, which he owns appraisal management company, is one of his many hats he wears. But he's got a wealth of information and knowledge. So, John, I just want to let you guys introduce yourself. And then we're going to go on and talk a little bit, and we'll let Bernardo and you and Micheal jump in as needed in the conversation. Amir and I are going to talk a little bit about our conversation. Our topic today, John, is taking that listing. So we got some issues with listings and pricing them and valuing them and stuff. But introduce yourself, John.
Absolutely. Well, thanks so much, Mike. I appreciate the invite today. And as you mentioned, I've been lucky enough to have been working with Charles Ruttenberg for a long time, doing appraisal education through the pro affiliate program. I've been a pro affiliate for going on 14 years now, and was lucky enough to be the chairman of that group in 2018 and 2019. Spent 10 years on the affiliate board. I'm all about Pinellas County real estate. I spent 27 years living in Pinellas. I live in Tampa now, and both of my adult children are real estate appraisers here in the market. I personally am not an appraiser. I'm the sales guy for them and for our company. But I bleed appraisal and I bleed real estate every day. So very happy to be with you guys this morning and as appraisers and speaking for the appraisers. we appreciate these conversations as much as you do, right? Because we learn about the market, especially what you alluded to a few minutes ago. What's going on this market right now? We all have to be in lockstep and communication to really understand the depth of these transactions. And I'm sure we're gonna get into that as we talk more today. Thanks again.
Yeah, we will. And I'm very optimistic and hopeful about joining you on our panel of experts that we can refer to. And my feeling is you'll probably put your information out there too if agents need to get a hold of you. And it's another resource for you guys. And like I tell you, I've been doing this a long time, pushing 30 years, and you're my go-to guy as far as appraisals right now. And I've been around some appraisers. But our topic today is taking that listing. And there's a lot of moving parts on this one since everything changed. So we're really just going to have a discussion. And then at that point, we're going to open it up. If anybody, especially our panel of experts, have something to interject, just, let us know, raise your hand or something, and Sheila will cut to you because this is not formal or anything. But I have been saying, we got Bernardo on here. Thank you, Bernardo. And I was talking to Bernardo yesterday, and, Bernardo's knocking on 20 listings. He said by the end of the week or something, he's going to be at 20 listings. So that's going to give us some expert insight, too. From what's going on and out there, how you get them. So what I say, or Amir says, may not be the only way to do things here, because we got Bernardo on there getting things done. But I personally, since the settlement stuff came out, and since we have to have a buyer's agreement, when I go out on a listing appointment, which we don't compete, so don't worry, I'm not listing anything. But if I did, I would only be negotiating my commission. I would have a conversation with the seller. I would do my normal listing presentation. I would tell you all the things I'm going to do, my track record. Here's I like a single page resume. You should know a little bit about me, who I am. I'm going to get you my pre-listing stuff. And when I come out there and talk to you, I'm only going to talk about what I charge. Right. And then I'm going to suggest that the seller, I'm going to say, now listen, if this was 2 months ago, I would have been negotiating the buyer's agent's commission too in this conversation. I'm not going to do that. Bernardo, you may have a different way to do it, and whatever you're working is doing good, and everybody else out there, this is, we're going to have an entrepreneurial Candyland out there for people with different models moving forward. But I'm just going to have that conversation. I'm also going to tell the seller, now, it behooves you, as we've been saying, to keep open any offers. You're concerned about the bottom line, the net in your pocket, Mr. and Ms. Seller, but we want the buyer to have competent professional representation. And they may need help paying their agent. And they may need to factor it into the deal. They may need to finance it. That's why we got an appraiser on. That's why we got different people and a lender on, and how to mesh this all together. But as I said, I promise you, if I go out and we're on even footing, and I go to a listing appointment that I don't have a personal relationship with the seller, and you go on, if you're trying to
negotiate the buyer's agent's commission.
I'm trying to say X percent plus the other percent.
Right.
And I'm just telling them that this is what I charge, but we're going to be open to offers, seeing if we need to pay that. I'm going to win that on you because the seller only heard he's charging half what he's charging. I'm going with the guy charging half.
Exactly.
That is a fact. People hear what they want to hear. And I can tell you that's going to play out.
Absolutely. And then, of course, you plant the seed for the seller and say, hey, buyers, they have to have that buyer brokerage agreement with their buyer, which says they have to pay their buyer. But truth of the matter is, most buyers don't have the money to pay their agent. So they are going to come to us with an offer and ask you, Mr. Seller, to compensate their agent. And I think that is wonderful. So now you can negotiate based upon that agent's skill level, based upon the offer you're receiving. Because why would I say I'm going to pay a buyer's agent X today when I don't know what the offer is that's coming through? If the offer comes in 15, 20% less, why would I want to strap myself to paying a certain amount?
Absolutely.
Let's negotiate it.
And there's also an argument to be made out there that because fiduciary is a big word, and it's going to be bigger coming soon. I promise you guys, the litigious, that big word again, society we live in is only going to get more litigious. And are you doing your seller a fiduciary responsibility if you're telling people up front what you're willing to go to and a commission split to the other side? I don't think so. I don't think you're doing it at all. And there's a good argument to people that don't believe that. So I think that's one strategy. Bernardo, I'm going to get to you in a minute because I know we've had conversations where you have gone a little differently and done things when you're getting your listings. But I want to talk about this one quickly. and I'm just going to use his name. I don't usually talk about any competition, but anybody out there heard of Mark Spain Real Estate? Give me a raise in hand. Anybody's heard of Mark Spain? Seen any of those commercials? Okay. I love, if I was to go out, two things I would change today. I went out for 27 years and negotiated my commission and a buyer's agent commission, not knowing that skill level of that agent and if they were worth it or anything. I did that. I'm not doing that anymore. And the other thing I would change today, because of information that has become I've become aware of in the last 2-3 weeks, is Mark Spain's making a great killing it out there with his guaranteed cash offer. That's his foot in the door. People are like, well, heck, this guy's going to buy it. I need to see what his offer is. So if it was me, I would be out there saying, I'm prospecting, I'm burning my phones up, I'm making contacts, and I get a lead from somebody to come out and talk to them. So why don't we start with a cash offer on your house? That gives us a base level point to start from. So this is, and I would take it to 3 different places. I would give you the cash offer, and the seller is going to give you that look like, what? No, I want more than that. So then I'm going to give you a price with some good appraisal advice of what is it worth today? In this condition, what could we reasonably expect to get? And, maybe you got a 12-year-old roof and a 10-year-old AC and these things, and we've got to look at all these numbers. And then there's a third. So there's good, better, best, sales things that they're usually the products, you got the base level, the next level, and then, a lot of people want the top shelf stuff. I would give you a third pricing conversation. That would be like, let's fix everything up. Let's get it inspected so we can punch out those inspection item reports. I'm going to pay for a home inspector. Let me tell you something. I get a pre-listing home inspection, and let's punch off the list what we need to on that. So there's no surprises for that buyer. And I'm also going to put that up in the MLS docs. Here you go. Here's an inspection. By the way, here's all the things we've already done. And then that's a total retail price. This is what we could expect to get. You've gotten this place in tip-top shape.
Yeah. So I think it's great to come to him with the 3 different options, and I know you touched on Mark Spain, and what he ends up doing is he's got an investor in his pocket, whether it's a large hedge fund or whatever, but he's able to go to one of those websites and figure out based on a property address an algorithm based offer, and that's your cash offer. They'll close in 14 days, Mr. Seller. They'll just leave it the way it is and let's move on, or we can put it up for retail today. What do you want to do?
Yep. How you want to move forward, and they can always defer back. So what we're going to tell you is, let me before I get to who his cash offers are coming from. Well, let's just say this now because I'm going to need Bernardo and John on this next section. I didn't know this, and I'm one of my best friends in the world is the Southeastern Regional Operations Broker for Open Door.
Name dropper.
I didn't even tell you his name yet. He's going to be on next week.
I thought it was me too.
He's going to be on next week. He'll come right on here. He's the buyer. So he's not a broker where we're talking antitrust commission garbage and all that. He actually had to get approval from the Wall Street people to let him come on. But he says, yeah, his name's Greg. I talked to Greg. We've been going back and forth for a week. I said, we need buyers for these flood homes. I need a real buyer. We've talked to some agents that are dealing with the investors out there. The investors are in Candyland right now. They've got licking their chops. They've gotten, all of a sudden they had nothing, and now they got everything, more than they can handle. Here's what I'm going to tell you. Your little local neighborhood flipper is not the person he might buy it or she might buy it from you, but they can only buy 1 or 2 or 10. They've got limited pockets. Even your regional flippers, Dad Buys Ugly Houses or whatever they're called and all that. They are going to come back and they're going to screw up your relationship with your customer if you're not careful. What's going to happen? You're going to come throw them a life ring. These poor people that are in dire straits out there that, have probably lost everything or the vast majority don't know where to turn. You're going to go, oh my God, okay, we're going to take pennies on the dollar, honey, but here we go. We got it. And then guess what? They're going to come back on day 4 or 5 of the inspection and they go, yeah, we're not really at that price anymore. Before the inspection expires, we're at this price. The little regional investor, it does not care about your relationship with that client at all. Now, at least with Open Door, and we are working on the back channel with it, it's not opened up to anybody in the market yet, by the way. Initially, Open Door was saying we're not going to be buying flood homes. Been working with Greg. Greg ramped it up to his VP total VP of operations in the company, and they finally said, we're going to buy some. Now, this is a Wall Street hedge fund. They are the biggest, and I'm not promoting business for, champion business for any other brokerage. I'm saying if you're going to have an investor buyer, It should be one that's solid and real and will close in 14 days, not screw your client up. So they have a channel for it. Again, I'm going to bring Greg on. Hank and I was talking this morning. A lot of good questions and the logistics of it and how it goes down. But basically what you're going to do right now, you can do it or the seller can do it. You just go make an open door offer. If the seller's doing it themselves and the agent's too lazy to even do that part where you do some video and stuff around the house, or you just don't, the seller doesn't want you to do it. Some sellers don't even want you in their houses right now. They're embarrassed of the condition and stuff. Either way, it doesn't matter. The agent's going to get what they get. If you've got the listing, obviously you could turn this and save somebody, get them out of a situation. And there's ways that you can get bonuses and different things. But for now, what Greg has told us to do is turn this in like a regular offer, that it wasn't flooded, because they have no channel for it right now. Their engineers are working on it. You're going to, once they find it's a flooded property in these zip codes and counties, it will then get elevated up to his Tampa manager, his Tampa pricing manager, who will then understand that there's a channel for it and you're going to get that price. But right now, they don't have a channel for you to say, this is a flood home, we want it. Send it in regular. They'll find out it's flooded. There'll be a subsequent offer. I will fill in the blanks on this as soon as I get Greg on here. But right now, that is how you can do it. You've got to let them know that it's get it through the normal channels first, then get the subsequent offer.
And the benefit for an agent to do that, other than to help their client, is they're going to make a commission, right?
Yeah.
The agent will make a commission when Open Door purchases that home. And then I believe they're going to make a commission when Open Door sells it?
I think so. And again, I'm not going to answer those questions. I'm going to get Greg on to answer that. But yes, they're going to make a commission either way. I think you get, it's not, whatever the amount is, it is. I can tell you their algorithm is they pay what the local going thing is. So in some markets it's 1%, some it's 2%, somewhere there. But as Hank and I were talking before this morning, you've got, last number I heard was 40,000 flood damaged homes in Pinellas County alone, guys. There's going to be a long time of us trying to clear this inventory off the pages, off the books. And listen, and again, Bernardo, we had this, Michael and I and Amir had this conversation last week. What are you going to do? A lot of these homes are going to have to be sold for land value, minus what it costs to get the structure off of it, because the investor's not going to pay that. And the investor's going to have to land bank that. Because if it triggers the FEMA or the FEMA 50/50 rule, which is applied differently per every municipality, it's a little strange, and counties, if you're in the unincorporated areas, there's a lot of moving parts going on. Bernardo, we were talking yesterday, and you're right. The people have been through this. We're not in an uncharted path here. We just need to talk to the people down in South Florida that have seen this stuff, or Southwest Florida, through Irma and what's going on. So understand, and I'm gonna open it up for our experts in a second, and Amiri, I'll let you segue it into them. But my understanding of the 50/50 is this. If you go to the property appraiser's page and it says your home's worth they've got you assessed or appraised at just market value or whatever they call it, $500,000. So you're thinking 50/50, then my repairs aren't $250,000. That's not the basis where you start, guys. First of all, you got to subtract out the value of the land. So if your land is assessed at, say, $100,000, now you take that $500,000 property and it's $400,000. That's not the end either. Then you've got to take the depreciated value of the improvement on the property. Your basis point might be, say, 300 now. It might be something less. But let's say you thought you were worth 500 and 250. Now you're down to 150, and the insurance comes in, and you might be over the 50/50 rule. If you're over the 50/50 rule, what the hell are you going to do?
Yeah.
What the hell are you going to do?
That's a question to you.
You're going to have to build back to code. And you may not have the money to do that. And there may be issues you don't get insured if you don't build back to code. You will be on that. So this is the things that we.
There's a lot of what ifs out there right now.
All right.
And a lot of confusion. And I'm glad we have John here and Bernardo and Michael to chime in on it, because the common question that I get is, hey, my seller's been flooded. They gonna wait for their insurance claim to pay out, and then they just want to sell the home as is.
Right.
But I can only sell it for land value. How do I figure out what the land value is? Well, we got to wait for more data to come in, for us to see who else is buying property, so we get some comps out there. Is that, more or less, would you say, John?
John, what's your thoughts on this whole quagmire?
Everything y'all have said so far is 100% spot on. You explained the FEMA 50 rule very, very well. We've gotten We're in the process of doing multiple 50 FEMA reports right now for homeowners throughout the beaches areas. And you're exactly right. Every municipality is a little different, but there is one overarching rule that changed, or the analysis that changed in the last 18 to 24 months. We used to do these FEMA 50 reports based on cost replacement, which is today's cost of replacement. And what they modified the program to a short time ago was cost reproduction, which means we have to go back to the actual age of where the property was originally built. So I'll give you a prime example. This morning, we're helping a couple out in Madeira Beach. The house was built in 1967. They bought it in 87. So they haven't had any real tax impact, right, from the county standpoint in 40 years. They've improved that home. They've put a new roof on it, new AC. They've done plumbing updates, multiple updates. But according to county records, and because they've had that property for so long homesteaded, their improved value is $137,000 according to FEMA, and their estimated market value is over 900 grand. So FEMA is offering them $67,000 to repair their 1,568 square foot home in Madeira Beach. So of course you need to come to a certified appraiser that understands this and can do the cost reproduction process for the municipality or for the county if it's unincorporated, and get the correct improved value. And there's only one small disclaimer I'll make on the improved value. Improved value is living space only, GLA. Heated and cooled living space. Everything else must be removed from the value and depreciated based on its current effective age in correlation to the actual age. So the age of the improvements, how long ago did they fix the roof? How long ago did they update the major mechanicals, the HVAC, the electrical, the plumbing, the windows? The effective age of the property in correlation to its actual age determines the depreciation rate on the improvements, and it's only heated and cooled area. So if you're 2,100 square feet under roof, but only 1,568 is your base square foot that's heated and cooled, that's all we're allowed to value is the 1,568. Everything else gets removed.
On the replacement of the age now, I didn't even know that point. So that's driving that 50/50 down even further, that your value that you think, oh, it's just a $90,000 repair. That's certainly never get me over 50/50.
Right.
Now all of a sudden the municipality comes in and code enforcement's shutting you down. You're trying to do things. I always look at who's my buyers on a property. Well, maybe I could sell it to somebody that, a flipper that's going to come in and fix and flip. Better be very careful, because you better know your stuff and do some due diligence before you get in there, because they could go to pull a permit and all of a sudden, you're not getting any permit. What are you talking about? You can't fix this up. It's a FEMA pro. And my further understanding, John, and this might be Bernardo, I don't know, one of you two, the FEMA rules that come into place and why you municipalities are getting code enforcement into enforcing it and making sure that they seem a little Gestapo-like is because that's how you get national flood insurance. You have to qualify as a municipality or a zip code or a county or whatever it is to get that.
Yeah, to get coverage.
Yeah, you have to be able to, get it. So, they don't want it where you can't even get flood insurance, period. And so there's a lot of red tape. There's a lot of ambiguity. There's a lot of misinformation. And the agents out there that understand this and can provide expert knowledge and information to people are going to be the winners.
Right.
There's no doubt about it. You might not be making a full X% commission that you're used to making on real estate, but maybe you're making half of X and you're doing 3 times as many deals because you're helping people.
And these deals are not going to be anything that's going to happen quickly.
No.
I mean, it's going to be a process.
Yes.
Going through from start to actually closing.
Bernardo, you got anything to chime in on our thoughts here?
Mike, going back on what you were saying, I mean, basically the municipalities, the counties, and maybe the reason that they will start actually overreaching a little bit and being overcautious with this thing is they have to follow all the rules to stay compliant, to be able to qualify for getting insurance. So
Right.
the second they allow people to do things that they're not supposed to do, they may lose that. And if they lose that, if the city of Indian Rocks, let's say, loses their ability to qualify for the NFIP, no one in Indian Rocks gets insurance. I mean, that's a huge liability to the city, and obviously it would affect values even more. Now, I think John is probably going to be able to elaborate a little more. Going back to this example here that we have 137 and then a 900 value. What do you think that's going to actually be? Where is that number going to end up at after you do your depreciation and do your estimations of value and so on.
So that's going to vary a great deal, right? But I'll use some averages with an asterisk that says every single home is going to be its own unique study. Pre-change cost replacement was about $300 a square foot. Post the change, $225, $240 a square foot, maybe. And that's relative in size, because as we all know, the smaller the higher the price per square foot, the bigger the smaller the price per square foot. So, a lot of that. And then the condition that we can prove the property was in immediately before the devastation or the damage occurred. That's the other burden, is having pictures, having permits, having proof that it's, like one of our clients that we talked to, they had just spent on like an 1,100 square foot home, $125,000 in remodel in the last year, and they had it approved prior. It was okay. They made it. But that's going to be hard to prove now, because now they have to replace all of what they just replaced, and the home was built in the 60s. So to get them an effective age of 2 is impossible. The closest effective age we might get is like 15 or 18 years, even if they did all the components, because the core structure of those improvements are from 1967. The plumbing underground, the wiring, the foundation, so that's it. And, I can't speak to political motivations, but it's obvious that, the government and the insurance agencies are going to try their hardest to, in every situation they can, force new building compliance, force new build for compliance, because that's the higher the percentage of compliance, as Bernardo referred to, is the better rating they get in the floodplain and the better insurance that's attractive for those areas. So it's going to take time, and it's going to be a case by case.
And without taking sides, I mean, obviously, the safer our communities are, the less of this catastrophic losses we're going to have. I mean, if you have a house that flooded 4 or 5 times, it's going to flood again. So there's no sense to keep throwing money at it and flooding money, basically, is what it is. But there's that delicate balance in between turning a homeowner into a homeless person with a FEMA check that doesn't rebuild a home, or it doesn't allow them to buy something else. And I think that's where you're going to come in and try to level the playing field a little more, versus just slapping $137,000 on a $900,000 house and say, have a good day with it.
Yeah, that's absolutely it. Yeah. And then the other part I want to touch on just briefly is the values, the market values. As you guys alluded to, you're spot on right. There hasn't been enough activity yet for us to really make any indication of what these distressed land values are, right? But the rule of thumb is very simple. If you look back in historical times, as we go into a market area, whatever the predominant amount of sales are in that market area is what the appraiser is compelled to value at. So if there's more foreclosures than any other kinds of sales, it's a foreclosure market. If there's more distressed land sales because of insurance claims, that's the predominant value of that market. And an arm's length transaction might get harmed in value because of the abundance of the other types of transactions driving down the overall value in that market. But you can't make a general statement. Every market is its own individual one. So you have to really look very specifically in that beach municipality or that specific neighborhood and kind of work your way out from there, as always.
John, what would be, Bernardo, John, you guys, a question. If I'm a homeowner and I've just, got that $137,000 check or that value, and I'm like, what? This is insane. What? I'm not taking this. I'm not settling this. What would be the next step, guys, for a homeowner?
I mean, I would say calling John would be the first step. And then at some point, a public adjuster or an attorney may have to step in and try to assist.
Okay.
Yeah, I appreciate that. The hat tip. Yes, that is first. I would hire a licensed certified appraiser that's familiar with the FEMA 50 reports and understands your individual market area, because as we alluded to in the very beginning, every municipality is a little bit different. Indian Rocks works different than Treasure Island and Madeira Beach. So just because they've done them in Clearwater doesn't mean that they understand what's going on in Paso Grill, right? So that is, the local competency is super important, and you hit the nail on the head, Bernardo.
Well, and then John, the other thing too is
your own private adjuster is vitally important.
establishing a baseline of value too, because I mean, in this particular case here, you use the 137 as the number, and let's say your number is 250, and they were expecting 700. That it's a dead battle from the beginning, so there's no sense of spinning wheels on it. And then another thing to keep, and I hear this all the time. I mean, I get calls all the time on this. There's still a perception out there that the 50% rule has to do with tangible walls and things, not with value. There's nothing anywhere that says that if you demolish half of the house or 49% of it, bricks and sticks, and you remove that kicks in because of that. It has only to do with value. So we get calls all the time saying, "Well, I'm thinking of rebuilding. My house is 1,500 square foot. I'm going to keep 5 walls so I can go ahead and." It doesn't work that way. It really doesn't. There's this. It must be an urban legend that goes around, and people say that all the time. So it's just nice to clear that out.
Yeah. So, guys, we'll take a very high-profile neighborhood, but there's neighborhoods like this all over, because I've been in some of them, the waterfront communities and the zip codes down on the beaches. But let's just take Shore Acres, because it's made the Wall Street Journal, and it's always been a problem down there. What do we're getting calls from people saying, "How do I value the land?" But what do you see? You can't bring even flippers. That's not going to work. A flipper's not going to come in. It's over 50. They're not going to. They're not a builder. They're not a developer. That's a whole nother market at that point. That's a whole nother buyer that you're looking at. Then there's also the people that go, "Well, just rent it out." That's not going to work either, is it? Because they're going to catch you. And you're never going to be able to sell it. You're going to have to look at it. Never at that point. It's never going to be able to get clear title. It's going to be clouded in some form.
Of course.
And then
No permits.
So no permits. It's going to be a nightmare. These people, they really are smart. It's their money. They're not stupid. They're not going to buy, this property. The seller, obviously, I remember this back in 2008 and 9. Sellers, had a hard time accepting that their property wasn't worth what they thought it was worth anymore. Even the people that have resigned themselves to selling it for, they say, half, or I took this hit, and I'm going to get my insurance claim, and then I'll just short sell it. Well, you still got to have a buyer. The only buyer I see is somebody that's willing to develop the property. If the 50-50 kicks in and you're not able to fix it and keep it the same, and even if you are able to fix it and keep it the same, put it back like it was, you might not be able to insure it, correct, Bernardo? At some point, the insurance companies might. So it's a wash. I think these communities. I don't even know where that came from. I think these neighborhoods, let me say that clear.
Better word.
I think these neighborhoods are going to look drastically different. I think it's going to take a long time. Mm-hmm. I think you're going to have to be in a different socioeconomic status probably to live in these communities. I think you're going to see these buildings built down, knocked down, and built back at probably high-end stuff. And be built up, to code.
I agree. I think it definitely, like in areas like Shore Acres,
yes.
They're going to have to build up. You'll have to build up now.
Yeah.
There are multiple business models that could work in Shore Acres. Let's say Shore Acres still close to downtown, still has all the desirability that it had 3 weeks ago, with the exception of the flood, right? So you can have a flipper come in and buy one house, tear it down, and build one in there. You can have a developer come in and maybe buy the entire block and build it as a developer. Or you can have builders actually go and get together with the homeowner and build the house with the homeowner to resell it, or build the home to sell it back to the owner once it's completed. Not sell it back, but build it for the homeowner. And I think that's where Micheal probably can step in and say, maybe elaborate a little bit more on construction loans, because that's basically what's going to be. You already own the land, and you're going to hire a builder to rebuild your property. You may have a couple $100,000 you got from the insurance company to put it as a down payment, or to try to keep your basis down. Micheal, is that going to be something that a lot of people are going to have access to, you think?
Yeah, there's 2 things there. So the first thing you can do is the 203H. That's going to be limited to, obviously, this permitting topic that we're talking about, whether the flood is going to veto that per se. But if it's eligible to be rehabbed under the 203H, the 203H can be used for 2 things. It can be used for a purchase. So the subject today was listings, right? So if everybody on the call is focusing on getting listings, those people are going to need homes. They can use the 203H loan to buy a new home with 0 down payment. So that's going to be a good option for those that you end up doing listings for. Where are they going to go? Also, that's a great product for anybody renting right now that lost their home, whether they were renting a house or renting an apartment in these areas that were affected. They can do that same loan. You can also use the same loan for a refinance and rebuild. It's kind of like a 203K renovation where you can basically, it allows you more extended loan to values. You can rehab the loan, assuming that you can get these permits that we've been talking about and it's eligible to do that. The second thing, Bernardo, would be if you go with a construction to perm type of product where you're basically taking the home and building it from ground up, or you want to do something like a home style loan where you're renovating the property. Again, the permitting is going to be the big thing there, but we do have the outlets if you can get the permitting and the allowance to do so on the lending side for any of those realms. Does that kind of answer your question?
Yeah, I think it does.
Yeah.
So-
I'll put my contact info in the chat. If whoever's running the CRR staff can share it with the team, that would be awesome. And if anybody has follow-up questions on that, I'd love to help.
Yeah, we certainly will. What am I missing?
Oh,
What am I missing here? Let me get this wrong. When I've got a home, I owe, I got a mortgage on that home, because I'm like everybody else, most people. Now I'm short. I sold it for the lot, or I've got a lot value. I still got that existing mortgage I got to deal with to try and get a new construction to perm or whatever I'm doing. Where's that magic working? Do we have to try and short sale that out, Michael? Or, am I just like, oh, the lender will forgive me. It's not a big deal. What am I missing?
So there's two pieces on that. The first piece is you're going to have the liability that you're stuck with. So let's say you have cash in the bank and you don't need to get approved for another loan, just hypothetically. You go out and you buy a house cash or you rent until you figure out what's going on. You're still going to have that obligation. So that's going to be up to the lender, or if the government comes up with any forgiveness specific to this situation, that's going to be between you and your current lender, whether you go some sort of short sale avenue or how that looks. I think short selling is probably going to be something we're going to see a lot of, and they're just going to take the hit. Now, what does that do for the buyer in our world for round two? Well, for the 203H, there's going to be forgiveness. They're probably not going to be at the situation to where their credit's completely destroyed if they kind of move swiftly. But the whole purpose of that loan is for people in that situation. So the guidelines are going to be focused around if that's the only credit derogatory event on their credit, I can see us being forgiving and allowing them to purchase. If it snowballs, or let's say you lose your house, so now you lose some sort of ability to work from home, and it causes kind of a snowball effect, and you are in a situation that allows you to afford your payments, would they say, okay, this is the event that caused the train wreck, if you will, they'll allow them to lend again once we can reestablish that you would be able to repay from a date forward. Like, hey, I went through 6 months of havoc because of this, and now everything's back up and running. But definitely, if it's only the mortgage is the derogatory thing on credit, underwriters will be forgiving. I'm not being an advocate to not make your payments, because I think the least obstacles you put in the way, the more likely that you'll be able to take advantage of these programs. But I'm just saying that it's going to be very probable that we're going to see a lot of 203H loans where people have had situations where they stopped making the mortgage because they had to rent somewhere else or live somewhere else or do things that they needed to do.
But if they did have to, if the home was damaged, they hold a mortgage and they have to go rent something else, or they go buy something else. I remember you saying, most mortgage companies, if you work with them, they'll probably offer you some type of forbearance, right?
Yep.
And so during that forbearance time, interest still accrues, right? Yeah,
Mhm.
typically. Yeah. So you still have to pay that, but at least they get a little bit of a break, if you will. It's not going to hurt their credit too much. But as you're saying, you probably have some forgiveness for them as well with the 203H that you're talking about.
Okay. All right.
Yeah, well, when they went through the 2008, 2009, and all that kind of worked through, it took many years to work through. One of the things they allowed was if you contacted your lender and said, I'm not going to be able to make payments because I need to afford to live elsewhere. What they may do is the forbearance. They'll put the interest on the back of the loan, so you won't have to pay it up front. It'll still go on the loan, but you'll just kind of have deferred payments for that period of time. There may be programs that they may down the road forgive that altogether. They may you may be able to renegotiate and do things like that. But those will be really, as this develops and we really understand how much of a big impact this is going to be to the industry itself, those programs will come out in more specifics on how to do that.
And I think when we talked about this a little bit last week, Michael, the homeowner people with, having all these problems with their houses, being displaced, with homeowners associations, with those monthly, you've got to pay those. Do not forget those, because your lender,
That's not going in forbearance.
your lender is much more forgiving than your homeowners association,
Yeah.
because they will slap a lien on your house.
And tie up everything.
They will. So have your clients talk to their homeowners associations if there's a problem. I don't know if some associations are making adjustments, or if their association neighborhood was drastically affected. But that is something to always keep in mind, because yes, your mortgage company they'll more than likely work with you. If you don't call your homeowners association, they won't. You've got to call them. You've got to make the phone call like you make to your mortgage company.
Yeah. Okay. Good point. A lot of people don't think about that. You just wrap it all together in one payment. All right. Well, do we have any questions from people on the phone for the experts that we got on the panel, the people that we got on the call? If not, we're going to try to be mindful of our time here. We appreciate you guys coming on. I know Tina's got some stuff. With next week, we're going to try. My goal is to have the broker from Open Door on, and we'll get detailed questions answered on how to get those offers in and whatnot.
Right.
Just update on the calendar. Tomorrow we've got buyer agreement forms from 10 to 12 on Zoom. Sign up for that. Tomorrow evening, you can't see her, but Sheila's over here.
Yeah.
And she's got Ruttenberg files in class in Zoom at 5:30. Sign up for that. Then we'll be back next Wednesday.
Next Wednesday, we'll be back. So, Amir, I'll give you final thoughts. I just want to thank John, Bernardo, Michael. Thank you so much for coming on. Thank the rest of you guys for investing in your career.
Yeah, obviously we had this titled, get that listing. And so, I think the closing thought here is go out there and get the listing.
And give it to integrity.
Go out there and talk to it, give it to integrity, close it. But part of giving it to integrity is, you have these wonderful people that are on here, Michael Cochran, John Barcelo, Bernardo. This is your team that you need to go to that listing with. Because we're going through some unprecedented times, and it may not be unprecedented for the industry as a whole, but it's unprecedented for us here in Pinellas County who haven't dealt with this before. So, talk to your appraisers, talk to your lenders, and talk to your insurance people about what's the best way for this seller to move forward. Whether they're going to try to short sell it, or if they're just going to sell it for land value. Give them the most amount of information you can out there.
Yeah. Be the expert and actually go help people out in the time of need.
Correct.
And your business will take care of itself. I promise you. All right.
Hank wants to.
Hank always wants to.
What do you got, Hank?
You gotta unmute him.
Unmute you, Hank. Wait, you got to unmute your own phone now.
Yeah, I think Hank, you have to unmute.
Hank, you got to unmute. You got to unmute on your end, Hank.
Okay, well.
There you go.
All right. Now you're back muted.
Sorry, we can't hear you, Hank.
Just hit that blue thing up there and it says ask unmuted. All right.
Well,
all right. Well, Hank, I'm sure it was a great. There you are. Unmute your own self, Hank. There you go.
How's that? I don't know what the hell was going on. Sorry. I have a question for John. Moving forward and historically, these areas that we're talking about that are down on the beaches and on the rivers and the communities locally, they're going to take a long time to rebuild. How are the appraisals going to look at? How are they going to value homes that are comps that have been, sold as is or scraped or whatever versus the person that's rebuilding? And are they going to go back past, say, that 6-month history and look at homes prior to the destruction as comps, or, or all these other distressed properties and stuff that are going to sell, well below what, market value would be. How do you think that's going to affect values moving forward from the appraisal side and the lender side?
So
Does
I
that make
think-
sense?
Yeah, no, I think it makes perfect sense. So I think what we're going to see, in my personal opinion, what we're going to see is naturally an attraction to areas that have had no impact through either storm, right? Like, because I live in an AE flood zone at the corner of Gandy and Bayshore in Tampa now. Zero water in either storm, and I pay a lot of money in flood insurance to live in my AE flood zone. My neighbors down the street at Euclid, not 8 blocks up the street, 4 feet of water in their houses on multiple streets. So I think what happens is, as buyers are smart. So as buyers go into these areas, they're going to look at homes that were impacted and were not impacted, and the areas that were not impacted or haven't been in multiple occasions. I think we see a natural increase in value in those areas because of that fact. And then those individual markets, I hate saying this, but every market is going to react differently because they're all going to have a different timeline, different mitigating factors that go into it. Like, my son lives in Bloomingdale. On his street in Bloomingdale Estates, there's 3 houses that got trees knocked into them. And my son had very minimal damage in comparison to them. He lost a fence and some screens. But his neighbors, they took a tree right to the house. They've been in that house 35 years. They're probably not going to rebuild. They're not going to and so every situation is going to be different. And there's not a blanket answer to it. It becomes even more important to do an individual market study on every one of these. And Hank, it's going to take some time because,
Because there could be
Totally case by case.
there's going to be a
Because
lot of public records transactions that we don't
right.
have market info on, and we're not going to be able to use them unless we can find somebody to tell us the story. So I think that's the first issue that we have. Because if you're distress selling and you're just selling out to a We Buy Ugly Houses or whoever, you're not spending real estate commission to do that. You're taking the check and you're running, right?
Right.
And we can't use that sale. I have got to have 2 verification sources of every sale, and we got to show it was exposed to the open market, regardless of it being distressed or arm's length. So without that support, we're leaning on the true market factors. It just becomes more and more important every time.
So in the short term, you could be looking at potentially over improving if you wanted to sell based on what the market's going to be. But in the long term, I mean, we know that typically those areas, come back. But it could be, so it's going to be, I guess we all have to look like really long term here with our buyers and our sellers, because there's ramifications in the short term for both. Okay. Thank you, John.
Yeah.
No, you're welcome. I read an article, and I don't want to extend it. I know we're pressed for time, but I read an article not 2 days ago that there's like 11,000 houses in the substantial damage category in Pinellas County. And they must comply to the FEMA 50 rule if it's considered substantial damage. So there's 11,000 houses that must be rebuilt. No questions asked to current.
Just in Pinellas.
Just in Pinellas. So
Yeah.
yes, this is going to take time. This is going to take
Years.
unfortunately. Yes.
So
Thank
what do
you
you
guys
guys
for the
think
invite.
it's going to do? You think it's just more so than ever? You're going to almost be reinventing your database, and any former algorithm out there that was good on giving values is kind of thrown out the window currently, isn't it? It's going to take a real live human being that can do some deductive reasoning to figure the values on these. Do you think, John, that like the shore acres, I don't want to use shore acres, just the waterfront community, I've seen a couple of them, and I've had a couple ask me questions that, the whole neighborhood's flooded. You see their whole life out in the front yard. It's sad. It's tragic. But then there's 2 or 3 houses in that neighborhood that never got touched by a drop of water. Do you think they're holding their same value that they had prior, or do you think that the whole neighborhood, this is bringing their value down too?
Shore Acres in particular, my cousins lived there for years. I think those few houses, they get stigmatized by the entire neighborhood unless there's some discernible reason why. Like they were built up 6 feet higher than all the other houses. Then yeah, okay, that is a clear indicator to every buyer why they were able to stay out of the water. But if it looks just like everything else in the neighborhood and it's almost just luck that they didn't take water, then more than likely they're going to be negatively impacted by everybody else. There's going to, South Port Tampa is a good example. They built a new Lennar subdivision down there, right? And when I first saw it going in several years ago, I was like, what are they thinking? But I drove down there and they built those home sites up like 8 feet. So none of them had any problem with any of these storms because they came in and prepared the land properly. So I think we're going to start seeing that in some of these waterfront communities, not just the beaches, but other waterfront communities. To what you said before, it's going to take a kind of combined, concerted effort to do permanent fixes in some of these areas. Or you're like my cousin, you're just going to rip out your walls for the 3rd time in your life. What? Like, and she's done. That's
Yeah.
it. It's the last time she's out. And that's.
Oh, and I guess to add to John's point there, once you bring it up to today's code, your flood insurance drops from sky high to $500 a year, which is going to affect value in a positive way, obviously.
That's right.
And then it's new construction. So there's some traces of communities that went through what we're going to be going through in the next few years here. They come out on the back end of it with higher values and nicer properties. So it's just going to be painful in the process, during the process, but we'll get through it.
Yeah, it's gonna be a slow, tedious process all the way around, I think.
Yeah, it's going to be years. It's not going to be months. It's going to be a long time before we get back to where we need to be.
Yeah.
All right, guys. Thanks for being on. John, Bernardo, Michael, thank you all. We will. Thank Mike and Mary and Sheila. Yeah. Hey,
Oh, wait,
Sheila,
wait.
Oh, Tina too.
He said,
We did,
come
we
here,
said-
Mike. He didn't
So,
say my name.
guys, we're gonna be watching your emails and social media. We're gonna have continually have guests on here that can provide valuable information like we had today.
Absolutely.
So thanks, guys. See you all next time.
Thanks. See you next week.